Well, love him or hate him or have the inverse Jim Cramer ETF, he absolutely annihilated the CEO of Starbucks. Let's talk about it and let's check the reporting. This is all over Twitter because Starbucks dropped 17% post earnings, and it was unbelievable. Nobody saw this coming. It was out of left field. They missed expectations all around. Like, it was absolutely devastating. Nobody saw all of that coming. They thought it was going to be bad, but not that bad. So let's talk about that. They had revenue of $8.5 billion, which missed by a lot. And they also had a 4% decrease in comparable sales. But not only that, they had a huge bet on China in Chinese expansion. And that absolutely was obliterated because they had a 6% fall while a 1.4% gain was expected. But not only that, Jim Cramer came in swinging, and he had one of the best, in my opinion, interviews on the CEO. The stock fell another 5% while he was talking. So I want to see what is in this video. And do you think that Starbucks can rebound? Do you think the long-term story changed? Or do you think that this stalwart is done? Like donezo, completely done for going to zero? Let me know in the comments, and let's start this video because it's down 30% and we need to see if we want to keep holding or not.
It's down double digits. Company posting quarterly results that I would say would be substantially below street consensus and cutting its full year guidance, one of the bigger guidance cuts I've seen.
Jim, it was a very tough quarter. Thank you for having me. There were three reasons for this. First, we saw unexpected pressures on our occasional customers, more intense than we expected, that impacted their visitation. Second, the choppiness of the recovery in China continued with a more intense price war than what we expected. And third, challenges of our business in the Middle East that impacted us not just in the Middle East, but also in other geographies.
So what he's talking about here is he's talking about pricing power, which we all thought that Starbucks had, but apparently they don't have enough of because they're seeing their occasional customers, their customers that come in between 5 to 6 days a week, are not doing that anymore. And we can definitely see that the consumer, everything is raised. Like, all of the prices are raised. Everything is raised in this economy. Like, if you go outside and step outside, it's a meme at this point that you spend like at least $100 outside, and Starbucks is no exception, except they're supposed to be the luxury coffee. They're supposed to have the pricing power, but we're not seeing that pricing power, which I don't know about you, but that isn't bullish. And then what he's talking about for the Middle East is the licensees negotiations that they're having a little bit of trouble with. And they're also talking about the boycotts with the geopolitical tension in Israel, because they're not seen in a very good light with that.
Now, what I'm trying to figure out, sir, is why did you not feel the need to pre-announce the shortfall, given the fact in the previous quarter, your CFO said that she felt that you could have a earnings per share growth in the range of 15 to 20%. This is a substantial decline from that. And given the fact that you said on the call that April did not end well, I'd like to know why you did not feel the need to come out and say our quarter is going to be substantially worse than expected at least 4 weeks ago.
I think, Jim, we've been working on action plans to address these headwinds. And so what we wanted to come back with was not just the announcement, but also the action plans that we have in place, which, by the way, are not business as usual.
Oh, Jim came in swinging. You can tell he has a lot in this position. Woo! I don't know. That didn't sit right with me. That was not transparent at all. Deflection at its finest. What do you guys think? He didn't even say anything about why he didn't do that. And if you don't know, part of investing, like especially in individual stocks like Starbucks, you're supposed to help shareholders and let them know about the guidance, let them know more about the forecast. When you see a poor forecast, you're supposed to revise down and revise lower. A lot of companies do this. They can revise lower or they can revise higher. So we'll see that like in between quarters, a lot of companies will come out and be like, oh, we're having a great quarter, so we're going to revise it up a little bit more. Or, oh yeah, our sales are not so good, so we're going to lower it a little bit more. But they absolutely did nothing. And his answer to that was because they were coming up with action plans that they wanted to tell the shareholder. I don't know, that doesn't sit right with me.
Well, let's finish, because I know that investors are trying to figure out why they should hold on to the stock. Some of the things that I am confused about, I checked with all the major, both public and private companies that are in a similar business to you, and no one saw a 3% decline in comp stores because of weather, and none of them saw a negative number except for you. Is it possible that your coffee is just too darn expensive?
Jim, I think that if I look at the U.S. occasional customer, they have clearly cut back on visits to us. We have not been able to communicate to them the value that we provide. So what we are doing about it is, it's not business as usual, but there's an action plan we have in place in order to do that, to reach them and to communicate the value that we are providing. What we're doing for that is we are making it attractive for them to come back into the Starbucks app and join it. On the app, what you will see is you will see value that they haven't seen because they've not been part of that environment. There are drops that are going to happen every Monday. There are bundles that we're putting in place that are attractive for them. For example, a beverage and a drink at a certain price. And so what you are seeing there is the effort we're making in order to ensure that our occasional customers get to see the value that we provide.
That's a really big point that Jim Cramer brings up, is that, we're seeing that the consumer is not strong. We're seeing that prices are high, and they said that they're seeing occasional customers slip, and that is their main problem. Everyone else that's in a similar field for consumer goods, like McDonald's, who has coffee, whether you like the taste of that coffee or not, they're doing much better. They're much stronger. The earnings reports and all of the earnings for consumer-based goods, they're not doing as bad as Starbucks did. Like, this was terrible all around, and this is a Starbucks problem because they don't have pricing power. It's not a weather problem. It's not a consumer problem.
I'm concerned with linked quarter, why you had not the occasional, but the hardcore drop off.
Death stare.
Jim, if you look at the most loyal customers, they actually continue to come in, they continue to buy as frequently, they continue to customize and upgrade. It's at the tail of the loyalty program, particularly those that are, in the 90-day active, as we call it. They, again, are very similar to the occasional customers. We have an action plan in place with offers that have gone out even as recent as this week.
I have to push back a little bit because Starbucks is not known for having the best coffee. They are known for being great in the corporate world for location, convenience, and getting customization in a fraction of the time. So basically you can just go on the app, pay for it, pick it up, you're on your way to work. Like, it's perfect for corporate places. They have the perfect locations. So in my mind, when he's talking about these occasional customers who are the corporate people, who are the people on TikTok who want the customization, who are the soccer moms who just, you want to grab and go. If they want to bring the occasional customer back, they need to realize that the market is saying, no, your prices are too high. Your convenience is not enough for me right now.
More important, I think, is the linked quarter decline. Now, let me, before I turn it over to my colleagues, you said it's not business as usual, and I want to make a point here, sir. You are still expanding as if it is business as usual. You add, for instance, on the quarter, you talk about opening stores in Honduras and Ecuador. Is it not time to pause, sir, and figure out what's really going wrong and spend a deep dive and making it so that this decline in comp store numbers does not continue? Because it is perilous to the actual existential existence of Starbucks.
System sales in Latin America expanded double digits. Our sales in Japan expanded double digits. Our business outside of Malaysia and Indonesia in Asia Pacific showed growth. If you look at the U.S. business and look at the fundamentals of the U.S. business, we are holding share in the U.S. We are still the largest player in out-of-home coffee. If you look at some of the metrics that we have...
Dunkin' Donuts, Tim Horton said you were not holding share, sir. I regard them as being seminal companies that are just as good when it comes to McDonald's says you are losing share. I can't go against those three companies. They are too good and too honest and too big for me to dismiss.
And his action plan is to do like a buy one, get one free to get those occasional customers back, which may short-term wise get people back. He's not looking at the root of the problem, and Jim Cramer is trying to say, hey, you're expanding like you're not having a problem, but you are having a problem. So why don't you lower the prices? Because obviously you don't have as much pricing power as you thought. And instead of the CEO going, yes, that's part of the action plan. We are going to lower costs and we are going to try to get our brand that has been deteriorating because of boycotts. We are trying to get a better brand. He's saying, yeah, we're still going to expand. And then the second point, we're maintaining share. All of the coffee companies are taking share from you. So you say you're maintaining your number one spot, but it's not as good. The CEO keeps saying that he has an action plan in place, but is not addressing those problems. So I do like that Jim is kind of, like pushing him a little bit and being like, hey, can you please address this?
If you look at our in-home coffee business, it grew share 140 basis points. But if you look at the business underpinning us, tea grew 8%, cold grew 1%. So there are elements in here. If you look at our partner sentiment and what we have inside stores, attrition is down to its lowest levels. So there's work going in. The thing we didn't do enough of is really attack the occasional customer with delivering and communicating value to them in a more aggressive manner.
I think that the market is definitely trying to tell them that it's time to lower prices. And they have the best locations. It's very convenient, very time sensitive. The drinks are made very quickly. And you get whatever you want. So the snippety of CEOs can get whatever type of coffee that they want, exactly how they want it. And that is the brand of Starbucks, in my opinion. And they just need to focus on that while temporarily lowering the costs, because right now, yes, the consumer has more pricing power than Starbucks does. And they just need to face those facts and get more sales and get more traffic. Let me know what you think in the comments. This was a very interesting video. Great job for Jim Cramer for answering. Great job to Jim Cramer. He did wonderful for the retail investors and for asking the tough questions. So let me know what you think. Love you.